$438 billion in one quarter. The mega deal is back. Bankers are finally ditching the fleece vests and buying real suits again.
Please, they never stop buying suits. But don't call this a healthy market. A third of these deals are just panicked executives buying anything with AI in the press release.
Panicked? Try terrified. European dealmakers are crushing North America by 11 points right now. American boards are absolutely sweating.
Speaking of sweating, Merit Medical just dropped $140 million on Viewpoint. Let's see what they actually bought. The rundown. $438 billion. That is the final Q1 tally, hitting a 5-year high. Mega deals are officially back.
Oh, the bankers are thrilled. I'm getting texts from guys who suddenly remember my name. Let's hit the rundown before we get into the heavy stuff.
First up, Bluebird Corporation is dropping about $200 million to buy out the rest of its Microbird joint venture from Jopari Group.
Classic cleanup trade. You date for a decade in a JV, figure out you actually like living together, and buy out the partner.
Next, private equity firm EagleTree Capital grabbed the Opus Group, prominent marketing and ad agency network.
PE buying at agencies is a bold move. Feels like catching a falling knife with generative AI threatening the whole agency model.
Or they are buying the cash flow cheap. Opus has the client roster.
Speaking of AI, a third of the top 100 global deals last year cited AI as a primary driver. Behind closed doors, it is a frantic scramble. North American dealmakers are noticeably lagging behind European acquirers right now. Europe is outperforming us on deal success metrics by over 11 percentage points in Q1.
I am sorry, I hate that stat. European acquirers aren't inherently better at M&A. They are just buying smaller, boring industrial tech, while American boards throw billions at anything with an AI domain name.
You cannot dismiss an 11-point gap, Maya. North American boards are sweating. They are demanding to know why their expensive bankers are lagging behind Frankfurt.
Because Frankfurt isn't trying to buy a prompt engineering startup for 10 times revenue.
Fair, meanwhile, a deal that actually makes physical sense. FlexGen Power Systems bought Clean Energy Services to expand battery storage and utility-scale solar.
Hard assets, tangible power grids. Also in practical tech, Office Ally is acquiring Jopari Solutions to expand its healthcare claims network. Boring, highly regulated, prints money.
Exactly what you want. We'll be watching the NASDAQ tomorrow to see if Rival and RTB Digital finalize their merger under the new RTB ticker.
We also need to talk about our top story. Merit Medical dropping $140 million for Viewpoint Medical just to get the OneMark Imaging System.
That is a fascinating, strategic play. Let's look at the footnotes on that valuation. The big one. $438 billion. I just need to say that number out loud so I actually believe it.
First quarter of 2026 is officially a 5-year high. The drought is over, Nate.
The mega deals are back. We are seeing 10 billion plus transactions getting thrown around like it is 2021 again. Financing conditions finally thawed, and boards are getting incredibly aggressive.
Aggressive? Sure. But look at the actual press releases on these mega deals. 1/3 of the top 100 global deals from the past year cite AI as the primary driver. It is practically a regulatory requirement now. If you do not put AI in the pitch deck, does the deal even exist?
Ouch, but you are not wrong. From what I am hearing behind closed doors, it is a total panic. It is musical chairs for AI-enabling tech, and absolutely nobody wants to be left standing when the music stops.
I read that as pure FOMO, and frankly, North American buyers are doing a terrible job executing on it.
Wait, really? How bad?
The data is brutal. European acquirers outperformed North American buyers by over 11 percentage points in deal success metrics this quarter. 11%. That is a total bloodbath.
Oh man, I can literally hear the excuses in the US boardrooms right now. But the regulatory environment is so hostile. No, Chad, you just overpaid for a terrible asset because you panicked.
Exactly, which is why I actually respect the Merit Medical transaction today.
Merit buying Viewpoint Medical? Maya, come on. That is $140 million, We were just talking about nearly a $500 billion quarter and massive mega deals. This is a rounding error.
It is not a rounding error, it is precision. Merit is not buying a buzzword. They are buying Viewpoint specifically to lock down the OneMark Detection Imaging System. That is, interventional radiology IP they desperately needed to compete.
Sure, it is a nice bolt-on, but it hardly moves the needle on the macro scale.
I completely disagree. I will take a $140 million targeted IP grab over a $10 billion AI vanity project any day of the week. Merit knows exactly how they are going to integrate OneMark. It is incredibly clean.
Fair. I guess it is like Bluebird dropping $200 million to buy out their micro-bird joint venture from Girardin Group. Just cleaning up the house?
Yes. Or Office Ally picking up Jopari Solutions to expand their clearinghouse network. Sensible, boring, profitable. Not everything needs to be a $10 billion splash.
Spoken like a true footnotes nerd. But I see your point. The giant numbers get the headlines, but the middle market is where the actual integration happens without destroying shareholder value.
I am going to frame that. A recovering banker just admitted mega deals destroy value.
Hey, I said they can destroy value. Do not twist my words. But speaking of deals actually making it to the finish line, we need to prep for the bell tomorrow.
Right. Rival and RTB Digital are finally finalizing their merger.
Keep an eye on the NASDAQ. They start trading under the RTB ticker tomorrow morning, and I want to see if the market actually rewards that tie-up. Voices. 1/3, Maya. 1/3 of the 100 largest global deals last year cited artificial intelligence as a primary driver. Analysts are officially calling it the ultimate deal catalyst.
Primary driver or primary buzzword? Come on. I read the footnotes on these filings. Half of these buyers are acquiring standard workflow software and slapping an AI sticker on the press release to pop the stock.
You are so cynical. Look, behind closed doors, it is a completely frantic race. I talked to these advisory teams. They are legitimately terrified of missing out on AI-enabling tech before their competitors lock it up. It is not just window dressing.
Show me the revenue synergies in the actual data, and I will believe it. Right now, it just looks like panic buying, especially when you look at how North American deal makers are actually executing.
Oh, you saw that regional split.
Hard to miss. Industry observers are pointing out a massive divide for Q1. European acquirers are outperforming North American buyers by over 11 percentage points in deal success metrics. 11 points.
That is a bloodbath. You just know there are North American managing directors sweating right through their fleece vests, trying to explain that underperformance to their boards.
They usually just blame interest rates.
Not anymore, not when the Europeans have the exact same macro headwinds and are still crushing it. Boards are getting way too confident to buy the old excuses.
Well, they better figure it out fast. Financing conditions are improving, which is emboldening the large cap buyers. Everyone is watching to see if this surge in 10 billion plus mega deals carries over into the second quarter.
We will get a fresh read on market appetite tomorrow morning.
Right. Reveal Inc. and RTB Digital are finalizing that newly approved merger.
Keep an eye on the NASDAQ. They start trading under the new symbol RTB, and I really want to see how the street prices that integration. Spill the tea. I just want to be a fly on the wall in these North American boardrooms right now. The sweat must be pouring through the Patagonia vests.
You mean because they are getting absolutely embarrassed by Europe?
Exactly. European acquirers beat North American buyers by over 11 percentage points in deal success metrics in Q1. 11 points. If you are a U.S. dealmaker, your board is asking some very pointed questions today.
And what is the excuse? Let me guess. The regulatory environment?
Always. They blame the FTC, they blame the macro environment. But behind closed doors, the real gossip is that they are terrified they missed the AI boat.
See, this is where I push back. The data shows roughly 1/3 of the 100 largest global deals last year cited AI as a primary driver. But I read the footnotes on those deals, Nate. Half of them are just slapping the letters A and I onto basic analytics software. It is corporate theater to inflate valuations.
No, come on. You are missing the actual desperation here. Yes, the press releases are mostly garbage. I know how the sausage is made. But the scramble to secure actual AI-enabling tech before competitors do, That is a total bloodbath right now.
A bloodbath where North America is somehow losing? That does not even track given the capital concentration in Silicon Valley.
Because the US megacaps are completely paralyzed by antitrust fears. So the traditional large cap buyers are trying to step up and they just lack the conviction. Meanwhile, European buyers are quietly crossing the pond and scooping up the underlying tech.
Okay, that is actually smart. While US buyers are paralyzed by their own lawyers, Europe is eating their lunch.
Eating their lunch and taking the silverware?
Well, somebody over here is spending money. Total Q1 deal value just hit a 5-year high of $438 billion. So if they are not buying AI, what exactly are these mega deals buying? Geek and tomorrow's radar. Vince awes som for desit.
I'm keeping my eyes glued to the NASDAQ tomorrow morning. Rival and RTB Digital are finally merging and trading under the RTB ticker.
You can watch the microcaps, Nate. I'm looking at the mega deals. $438 billion in Q1 is a 5-year high. I want to see if these 10 billion plus checks keep clearing in Q2.
Oh, they will. The AI panic is real. A third of the top 100 deals last year cited AI as the main driver. North American deal makers are absolutely frantic behind closed doors.
I don't buy the AI excuse. Are they frantic about tech? Or are they frantic because European buyers are crushing them?
Wait, crushing them how?
The data is brutal. European acquirers outperform North America by over 11 percentage points in Q1 deal success metrics.
Wow, okay, that explains the gossip I'm hearing. North American bankers are practically hiding from their boards right now.
As they should be. We'll see who panic buys an AI startup tomorrow just to save their annual bonus.